Today, we're going to look at NVIDIA. They have earnings coming out Wednesday, May 28th after market. And today we're going to look at, is it the right time to buy NVIDIA? Should we hold off? Is the price going to go up? Is it going to go down? I'm here with Danny, and we're going to look at NVIDIA today and we're going to give you our forecast of what we think is going to happen, what the possibilities are, what the resistance, support levels, what's the current price, what are the bottoms supports, what are the top supports, and yeah, we'll go from there. How you doing today, Danny?
Doing good. That is the question. All these tech stocks right now are booming. NVIDIA is really something to look at, and so we're watching this close. So yeah, let's jump in, and I'm anxious to hear your analysis on what we should expect and what to look for.
Yeah, so let's look at what's the pulse in the market right now. What do others thinking? What are the institutions? What is their price target? So this was May 24th. This was yesterday. As a recording of this video, and what we're seeing here, if we look at this, they're expecting the revenue to be about 43 billion, up 66% year over year, with an adjusted net income of about 21 billion. They're saying currently they're continuing to hold support about 130 support level, and in terms of the stock price, they're saying, they're expecting it to hit $160. And when they put out price targets, Danny, what they're really doing is saying that's from between now and 12 to 18 months from now. So, it's not like 160 next week or after earnings. They're saying in the long term, 160 is what they expect. Another one saying 180 in 12 months to 18 months is their target. And so I think the majority of what I'm seeing out there is, they have it at, $200 price target for 12 to 18 months from now.
Right. So these are different groups. These are different groups that you look at, and they give each group gives you a different idea of what those targets are going to be.
Right. And Investopedia, they did an analysis, and they're expecting a big jump in revenue. I think everybody's expecting that. One of the things that a lot of people are concerned about is how are the tariffs, the China tariffs, right, up to 50% tariff. So there's a lot of, there's a tariff war going on. So how's that going to affect NVIDIA, right? That's going to be on everybody's mind. So, one of the things that I like about this, and I'll get to it in just a moment, so again, the same earnings, adjusted income, revenue. One of the things I saw here is that, Oppenheimer analysts expect the impact of the restrictions to be relatively modest. We see upside despite the loss of H2O sales to China. And the analyst said, noting that the country now makes up just 5% of NVIDIA's total sales. Did you know that, Danny?
Wow, I didn't know that.
Right now, NVIDIA is only selling 5% of their sales goes to China. So, I would say the tariffs probably impacted in terms of future sales, in terms of, maybe what's going to happen from this point forward. But up to now, it shouldn't have affected their revenue up to this point because they haven't been selling a lot to China. So it helps me to think like, man, maybe they're going to really, they can beat expectations because China and even the tariff that we've been going on the last month or two, maybe, would only have a 5% effect. And even that, it's not going to be all of that 5%, right? Outperform targets 175. So, I'm just looking at the news, looking at, what others are saying. All price targets are higher than the current stock. I don't think there's anybody that expects it to miss. So that's bullish for NVIDIA.
Yep.
If we look at the technical indicators on NVIDIA, we're looking at the daily here. And what I'm looking at is using the GenX system, of course, is, a lot of these indicators, clouds automatically appear here. And so what I'm looking in the daily chart is, if I kind of scroll out a little bit here, what I see is back in May of 2024, we came out of a $92 kind of resistance level at that time, and we broke out and, came up, broke the 130, came back, tested the 120, and we came all the way back in August of 2024 and tested the 92 support once again, came back up, tested the 130, and then broke out of that 130, right? And we got all the way to a high of about 153.
Yep.
Came back down, tested the 130, went all the way back to the 153. And since then, we've came all the way back in January, came all the way back to April, tested the 92 once again, Danny. So, in terms of overall trading range, anywhere from 92 to 153 is its trading range. So for the last, what is that? Since May of last year till now, you can see it's in 1 year of consolidation in that range. However, short term, we're looking, we definitely can see we got a green signal there that indicates a bullish momentum. So, you can see we had a little bit of a pullback retest here, bullish, on the daily, all the way from, let's say, the beginning of May until now. And what this looks like to me is, just a healthy pullback, a retest, right?
Yeah.
And what they teach in the GenX system is these retests are very healthy. And what we would expect is this wick to touch these dots inside of the cloud and having a couple of, having it retest that, and then getting a couple of green candles after the fact would indicate very strong bullish momentum. That would actually be very healthy if we saw something like that. So, I would expect this to be healthy. I'm not concerned about this, but, come Wednesday, 3 days, or what was that, 3 days from now, we're looking at if the earnings beat, we're probably headed in a positive direction. If the earnings miss, we could potentially be coming back. Where are we going to go back to? Are we going to come back to the 120? Are we going to come back to the 113 or the 92? I wouldn't expect that it would drop that far. But, looking at the 120 or the 130 is a more recent support that a lot of analysts are saying where the current support is. But after earnings, when I'm looking at 120, I'm picking that because if I look at, I look at all these spots where people are, where people have bought, a lot of buying occurring in that range. I mean, there's just so many.
Yeah.
There's just so much support there. And so 120 for me is a very strong support. Now, that doesn't mean that it can't break below that range. If it does break that, we have a critical support at 113. I believe that's a very safe zone. If it fails that, of course, it can go back to the 92 if it completely misses, or big concerns, future concerns. Who knows? Any of these are possibilities. My expectation would be that where it's at now, if they blow out earnings, of course they're going to be trading within this range here going forward. If they miss earnings or doesn't meet the expectations, even if they beat earnings and miss expectations, there's two different things going on there. We've seen it in the past, even with Palantir recently, where they beat earnings, but because they missed such the high expectations, the stock actually pulled back, even though they beat earnings. So that happened with NVIDIA, So I would expect if they miss earnings that it would trade in the range between 120 to 130. If I go to the 4-hour chart, you can see more of that detail of the pullback. Healthy. Look at how healthy that is, right? We came off a low, a higher low, higher low. We've just been creating higher lows, and this is just another higher low coming off of a support of about 127. More short-term support. And if it can hold that, then that's where the bounce would take place, like we were showing in the daily.
And you can also see that you got really strong supporting trend lines underneath that are.
Oh yeah, these supporting trend lines that the GenX
bullish direction.
Yeah, the green trend lines in the bullish direction that are automatically generated using the GenX system and trading view,
Mm-hmm.
clearly shows a bullish trend since April 7th,
Mm-hmm.
right? So we've been on a bullish trend up until this point. So the expectation is that it's going to continue in that direction. And I think NVIDIA has proven itself, quarter after quarter for that. Would this be the first quarter that they pull back and have that experience? On the 1 hour, we can see, very, very healthy. Looks like we were, about the 115 range,
Mm-hmm.
a lot of bullish momentum. And this to me is just consolidation, right? We've been consolidating since about mid-May, the last couple of weeks, and we've been in a consolidation preparing for earnings, right? So,
Right.
looking at that, we have a wedge forming coming into Wednesday, and you can see, and I would expect maybe trading to happen in this range. We might see an upside testing the high of 134, and somewhere in this range is what I would expect. And then come into when earnings are released, we're either going to come down. How far do we go? And if they beat earnings, how high do we go? That's going to be the question. So looking at it in terms of supports, the 113, 120, and a high of 153, can retest the 153. In the next 3 weeks, depending on, again, if they beat earnings or miss earnings, we're kind of looking at a certain range of trading. If we're looking at selling options, if I go to the sell, if you own the shares, right, or if you want to get into NVIDIA, is now the time to get in. If you were to buy the shares here, or you're buying the shares saying, hey, the stock's going to go up, they're going to beat earnings. But if you're saying, I want to buy the shares, but I'm not sure if should I wait till after the earnings? What do I do?
Right.
Between now and Wednesday, even Tuesday and even Wednesday, this stock's going to move. It can consolidate and stay consolidated. But if you own the shares and the stocks approach the 153 and you decide to hold on to those stocks, then selling a covered call may be the way to go. Then you can make some money at that high, even if they beat earnings. If it goes up 5% to earnings and it beats earnings, is it going to go up another 20%, or is it going to maybe go up another 5%? So what are the expectations? If you look at that, and for our example here, if I were to look at it, let's just assume that it goes up from 130. Let's say it goes up to 140. Okay. So right now it's about 131. Let's say it goes up to 141 before earnings. Call it $10, right?
Yep.
And so what I'm going to look at here is assume that we're going to go up $10. The option chain is going to stay constant. So assume this is saying 141, and assume this is the 13 is a 14. Okay. So I'm going to go up $10 because that would be the current. That would be the price, right? So we're gonna increase by $10, whatever that number is. So if I'm gonna do a covered call at a 141, then I'm gonna take it up from 141. I'm gonna look for a 30 delta. Okay, this is just an example, Danny.
Yep.
So let's keep going till we find it. So there's a 28. There's a 30. That's a 30 delta. So when I'm looking at 144 and the option price, the stock price is at 131, this option chain is going to roll. So if we were at a price of 141, then this would be 154, which would be very close to the resistance.
Right.
Very close. Does that make sense, Danny?
Yep.
You're following that?
Yep.
So if the stock price increases to 141, then you're looking at a total credit on one contract of $340, right? So if I do the math on this and I take $340 and I divide it by 14,400, That's about a 2.3%, 2.4% ROI in 1 month, right? If I take that into percent, that's, oops, let me go back. So 2.4% times 12 months, that's 28% per year, almost 29% per year. That's not a bad.
It's solid.
You're gaining passive income on the shares you own, with the probability of having to sell those shares very low if the stock price were to get to a certain high level. 147, that would be a 157 break even on NVIDIA. If you don't own the shares and you're thinking, oh man, I want to get in, but I'm not sure. I don't want to get in at 130. What if the stock price goes down, but I really want to get in, before earnings, maybe, if you want to get in before earnings, and the stock price rises to 144, may or may not be the right time. You have to make that decision on your own. We're not financial advisors. We're not going to tell you what to do. We're just giving you scenarios to look at. But if I know there's a 120 support, me personally, would I be willing to own NVIDIA at 120? I would like to own it at 113. That would be even better for me. So if I look at those ranges, let's say 120, 130 at the current price. So I'm going to assume, let me close this out here.
So right now, this scenario is if somebody does not own NVIDIA stock and they're looking to get into NVIDIA, right now could be a good time to get in if you're willing to buy it at $113 price point. What does that look like in terms of the
option? Yeah. I mean, you can buy the stock right now. Let's say stock market opens on Tuesday morning or pre-market and it's at 131. You can buy the shares at 131.
Then you make no premium. There's no
but people do it, and it's nothing wrong with that.
Right.
All we're going to be looking at is other ways to enter the stock or make cash flow in the process of buying the stock. The only risk of selling an option below the strike price is that if it does, or below the current price, is that if it doesn't hit that price and the stock increases in value, then you won't own the stock and capture the upside potential. But if you want, let's say NVIDIA on earnings misses earnings and the stock price falls to 120 the next day. I'm going to tell you, I'm going to be very excited to enter a cash secure put at the 120, maybe close to the money or below the money, depending on where I see it at that time, where I can maximize my premium and time it or calculate it to where I can enter the stock at about the 113 range, 110 range, 105. I can set the price that I'm willing to get in and make premium on the way in.
Right.
And that's what we're looking at, right? So assuming somebody buys the stock now at 131, one of the options they can do is sell an option. We call it a cash secure put. What that means is you're going to put your cash as 100 shares as collateral with the option for somebody to sell their stock to you at a price that you determine and collect premium while doing so. So what we're looking at here at 131, if I go down to a 30 delta, you can see that's 35. If I go down a little further, that's 28. Let's say 123 is a 30 delta. So let's call that a 30 delta. You can see the break evens of 118, which is below the $120 support. So there's, it's a little more aggressive. It's right at the support level. If I felt confident that 120 is the bottom, then I would have no problem doing that. But because earnings are coming, it's maybe a little more risky. So if I was going to get in before earnings, which personally I don't like taking that risk, but I'm probably going closer to a 20 delta. I want to give myself some more room in case they miss, and it so now we're looking at a 20 delta. The break even is a 115, 114. And so, that's closer to the critical support range down here. So my break even point would be 113. So this would be a little more conservative. And by setting that contract $266, right? 100 shares is $11,700 in collateral. So if I look at that, 260, and there's a bid ask spread, but yeah, let's take a look. What's in the middle? 2.7 is probably where it would be filled. So let's say $270. So we'll look at 270 divided by 117 per share times 100 shares per one contract. It's about a 2.3% return on your money in 1 month. Times 12.
Okay.
That's 28% return on investment on your money. 28%.
Yeah. So you're getting after a really conservative way to make cash flow and get between 27 to 30% annualized.
Yeah. So you make 28% on your cash, and you're getting NVIDIA at $117. I mean, even now, it seems like a pretty conservative, safe way to make money on NVIDIA and potentially own the stock at 117 if they miss earnings. I mean, that's still not bad. Another way to do it is if they beat earnings, then yes, you miss out on that $300 and you miss out on the upside.
Okay.
But if they miss earnings, and they come down to 120, then now I could open up and make $300 and now own it at $10 less at 107. I can enter a cash secure put, have even more security. Depending on what your strategy is, if you want to earn passive income and own the shares, then you could be a little bit more aggressive because you really want to own NVIDIA for the long term and make 2 to 3% on the way in, right?
No, that makes good sense. So using the tech hedge pivot method. So just to recap people's options, you have an option where you own the shares, and is there an opportunity here to make some cash flow on the shares you own? And the other option or situation is if you don't currently own NVIDIA and you're looking to get into the market, if you do own the shares, you have two options. You can do a put or a call, or you can just do nothing. You can. What's your overview, Mark, on making moves before earnings? I know there's an overall consensus, by the experts and how they typically trade. What do you typically like to recommend to people and give advice?
Yeah, it depends. I would do research if if somebody owns stock in NVIDIA and they're uncertain, they're going to ride it out. They're going to hold their shares. Maybe they just ride it out. If, like I said, me personally, if this week the stock were to go, the higher that the stock goes to the 153, the more likely I would to sell a covered call at a much higher price.
Yep.
In the 20 to 30 delta in terms of selling a covered call option,
right,
which could take me up to 165, 170. Yeah. I mean, there's plenty of room there to make 2 to 3% on my shares. If I own $100,000 of NVIDIA, 3% is $3,000 in a week. And if they miss earnings and it pulls back, I keep my shares and I can cash out. I don't have to wait 30 days to collect premium.
That's right.
For it to expire and for the contract to become worthless and me to realize all that premium, right? So if it misses earnings and it pulls back, I can make up to 50% of that premium. Instead of $3,000, it might be $1,500. So there's a lot of different ways when you learn how to sell options to make money on the shares you own and make money getting into the stock at a price that you set that you would feel comfortable getting into. If I do my analysis and I don't feel comfortable getting in at a price level, then it's not the time for me personally to get into that stock. That's right. What it tells me. Once I do my analysis, I learn if it's okay. I can't force it. Then I'm making a decision based on my feelings. There's expectations, and so it's, whether you're buying a stock, whether you're buying options, selling options, there's never a magic answer, right? There's not a this is what's going to happen. That's what makes it what it is. That's why we're doing all these videos. That's why there's so many people trying to figure it out. They got forecasts. They're going to miss. They're going to make it. It's like,
you
we're
pull the
doing our
information
best
together and make the best decision for yourself.
Yeah, you got to just, take all the information you can get to make the best decision. We're looking at fundamentals. We're looking at, what are the expectations in the institutional investors? What is the news? What are the, fundamentals? And then we're also looking at technical analysis. The thing I like about the technical analysis and the GenX system is that it provides some solid data. What we've learned using the GenX system and being a part of the GenX community and their Discord is that there are patterns. If you ever played video games, like Xbox, PlayStation, or Nintendo, if you're, my age, then that there's certain patterns. You play Super Mario Brothers, you play Miss Pac-Man, you play, the games that are a Fortnite. There's certain patterns. So once you've done it once, you go through and you know what to expect. You know what's coming. So the GenX system does a great job of identifying those patterns and allowing us to make smarter decisions, more informed decisions to maximize our potential for earning income and increasing our ability to make money on our investing. And it's definitely a huge part of our strategy. It's a big part of it. So, my advice to others are to do their research, subscribe, hit the notification bell. We're going to be putting a lot of information out. We're going to be sharing a lot of things with you. And so you don't want to miss out. Definitely don't want to miss out. And, Danny's going to be opening a paper trading account because he's getting involved and learning how to sell options. And so follow us. It's going to be like a reality TV show where you're going to be able to follow along and see how Danny does and how we do in helping him. So we're going to put ourselves on the line and allow you to see inside to see if what we say or what we do is what we say, and if we get the results that we are claiming or claim to get using the system. So
Mark's going to be sharing his portfolio as well, and doing real life trades and showing his moves and what he's looking at and what he's doing. So that's going to be some great insight for anybody that wants to learn, or if somebody that's already has some seasoned insight onto selling options. Is a great spot.
I would say if NVIDIA misses earnings and pulls back, I'm going to be reanalyzing NVIDIA and determining a place to either buy the stock or enter in with the cash secure put. So I'll make that decision once earnings are done, if I want to add to my portfolio.
Sounds good. Awesome, Mark. That's some great insight. I look forward to seeing what happens on Wednesday.
All right, Danny. Well, hey, thanks for joining today. And we'll look forward to seeing what happens. Have a good day.
Take care, guys.